Good morning and welcome. It's Jeff Fitzpatrick and it's Monday, so it must be time for my video log. Let's get into this. And this week, it's a bit of a special. After weeks and months of work on my stock picking system, I'm ready to go. It's now up, working, and I am delighted with it. So let's not waste any more time. Official news this week. There isn't actually that much. However, on Wednesday at 7 p.m. UK, the Fed, at least the Open Market Committee, the FOMC, will publish its meeting minutes. This is like the Monetary Committee of the Bank of England when they're talking about whether or not interest rates should be raised, lowered, or left the same. And from the minutes, we can see what their thinking is, how many people are voting or how many members are voting in favor of cutting rates and how many are not, and so on. Now, the US markets increased last week, hitting record highs. And that was because of the prospect of interest raising thinking by the Fed. So this is important. It can move the market, and we'll see what happens on Wednesday. So let's look at some company news. What have we got going on? Well, T-Tech, the directors and officers are being investigated on behalf of the shareholders by lawyers, I think it is basically, to determine if there's some illegality in their share dealings. Now, the big guys in this company, for example, Vanguard and BlackRock, haven't sort of reacted poorly to it. They haven't really reacted at all. But I think it's worth just holding back on that stock, or if you can, perhaps move out. The New York Community Bank, their shares have risen again, 6% pre-market a few days ago, agreeing to sell a 5 billion mortgage warehouse loan portfolio to JP Morgan, to JP Morgan Chase, as they're called. Comcast put a new bundle out. This is a bit like Sky putting out a bundle over here. And they've got a new streaming bundle for its subscribers, integrating something we don't have called Peacock, Netflix, and Apple TV at a discounted rate. They should be attracting more customers at that. Walgreens, who of course own Boots, they are set to offer their own more affordable version of naloxone. That's the opioid reversal drug. And it'll be in direct competition with the drug made by EBS. And of course, we've had a lot of trouble with that stock. And this does not make me think, hey, let's continue plugging away at that stock. Alibaba earnings fell by 5%, and that's hit their shares a little bit this week. But to be honestly, I think that just gives an opportunity to get more shares if you're in a position to do so. And that's the company news for this week. And next we have the market indices. All good news again. TICN stocks are now 146% higher than they were on the 30th of March, 31st of March 2020. It was a 4.76% increase last week alone, nearly 5%. The S&P equivalent is up 105% since the same date, 3% last week. The Nasdaq a bit less than the TICN stocks in the week, 170% up overall and nearly 5% on the week. The Dow, which of course hit an all-time high in the week, got to 40,000, is only up 85% since the 31st of March 2020. 2.27 this last week. So I know which stocks I'm following. And remember that TICN index includes 32 companies that haven't increased in share price at all since that date. So that's diluted it down a bit. And of course, these figures don't include the benefits of selling puts or calls and getting premiums, nor of any interest paid. So the TICN stocks in the index continue to do very well. Okay, so here we go. Here are my 21 filters that I'm now using to get to stocks to trade in. Now, that doesn't mean to say everybody should rush out and get those stocks. Quite the opposite. You need to do your own due diligence. You need to look at the charts. You need to look at the account involved and take into account all sorts of things that you want to take into account. All I'm saying is, if you apply these filters, you come out with the stocks that I will show you shortly. So this is a four-stage process. The first stage is to interrogate Value Line. What a valuable resource this is. It's where I'm getting my long list from. It takes the pool of stocks down from 7,000 to about 150. Let me show you that. So I'm in Value Line and I'm on the dashboard area. This is worth a look anyway. And in here, we'll see a couple of things. First of all, you've got supplementary reports. We click on that, you get reports. You can take all of them or just the last 30 days. And then any that you're interested in, if you click on it, you get a bit of an update. Remember that the Value Line reports only get updated, the full reports get updated, that is, every 3 months. So these are in between reports and very useful they are too. The other thing that if I go back to the dashboard, you can see in that same little panel is this selection and opinion. And if you go into there, you come up with this, which is, it's like a newsletter. So you're getting economic news and you get some portfolios that they're following. I looked at these, they're generally pretty good. About 80% of the stocks on them are in profit, but they're not all in profit by any means. And if we go down further, we get some really sort of suggestions of stocks that you might want to go into. There's a few different ones. I've looked at these. Some of them are not even covered on the charting package, and they're not all brilliant. But I have added some of them to my long list, and some of them are recognizable. There's Comcast in there, for example, and here are some different ones with low risk, high return on equity. And on we go. So it's worth looking at that newsletter. So then we go to stage two, which is the charts. And that's just like we're going through all the time. I go through the whole watch list and I look for stocks that have got a good chart pattern and where the indicators are doing the right things. That takes me down to only about 10 or 12 stocks. Then I can move on to stage three. Stage three is the deep analysis. Now, this is, I think, going to blow your mind. You'll see why I only do this after the charts because there's a lot of detail in it. And it's going to take us down to a target group of around 6 stocks. This is the output. So on the left-hand side, you've got the factors, and we can see at the very top, you've got the dates of the latest reports. You've then got the ticker symbol, the company name, the industry. Now I've got the industry in 3 times. I've got a common sense industry. So that's, for example, on CVS, it is a retail chemist. Then you've got what the general stock market calls that the industry of that company. In the case of CVS, it's healthcare provider. And then you've got the Value Line interpretation of the industry, which is a retail store. If you're sorting out diversity, then really you're best off putting a common sense explanation of what the industry is. I've got the industry rankings. They're not fantastically useful. They change so much all of the time and are unduly influenced by what happens to a particular company in the industry. And that could befall some disaster, or the management could do something stupid or whatever. It's not necessarily a reflection of the industry. I've taken that up with Value Line. We'll see if they do anything with it. Then I've got the latest scores for timeliness and safety. I've got the price, which is a live price, so I can check across there and make sure that it's meeting my criteria, not too cheap, not too expensive. I've got the financial strength of the company. Now, for me, anything below a B plus is a red flag. I've investigated what happens on these and what the scorings mean, and a B is simply not good enough. Then I've got in last year's dividend, and that's used for some of the calculations. Uh, the PE ratio, I'm calculating that fresh. So I'm putting the data in to get to that. Checking there's a full value line report is the simple yes there. And then I'm looking at the multiple. That's something that I use a lot. I want to know that if I can get this company, stocks in this company, for buying the assets at a price that's less than the value of the assets, I'm a very happy bunny. But I will pay up to 3.5 times. Then I've got the projected annual revenues going in there and a lot more data, including the convergence. This is telling me whether the gap between this stock's share price and the S&P 500 is narrowing or widening. At the moment, they're all, of these stocks at least, are all, the difference is widening. That's not the best. And then I've got the TI, it's really the TICN scorings. So this is what you would normally see as the 4x4 scores. And I've only got one here, which is actually giving me a 4x4 score. And that is a company called Hurn, H-U-R-N. They are consultants. But I've tightened some of these criteria. And also the benefit of doing it this way is that I get a red highlight on anything that is not meeting the criteria that's worthy of further investigation. Some of them are not really that relevant. So for example, the current assets, I want those to be more than the current liability, so basically more than 100%. There's one here at 97%. I'm not going to get too excited about that. The debt, I don't want to see too much debt, so this one is actually UGI. It got a lot of debt going on, so I'd want to go and find out why and check that out carefully. Headroom, I'm now using the shorter term, the 18-month forecast, and I'm looking really for 25%. But I know that those forecasts are not reliable, so I'm really giving a visual check on the charts and seeing what I think about them as much as anything else. But this also works for the 4x4 scores. But remember, I have tightened some of the criteria on these. So, you know, quite often you'll get a red mark, and this wouldn't have appeared in the TICN ones. So you'd be amazed. I can actually complete this for a new stock in about 10 minutes. It took a lot of setting up, and the spreadsheet's incredible. We've got all the information pertaining to each stock on a single column. So it did take a bit of doing, but now I've done it really 10 minutes per stock, and that's it. That has then got me down to, in this case, to 1, 2, 3, 4, 5, 6, about 9 stocks. So not bad at all. So that's 7,000 down to 150, down to 9. So the next stage is really the finale. Now I look for suitable put expiration dates, strike prices, premiums, open interest levels, and return on capital employed, including annualized return on capital employed. That's going to get me down to a handful of trades. And finally, before I would actually go ahead with any of those trades, I've got to go to the trading account involved and check that it's suitable for the size, for the diversification, and any of the relevant factors. So this is simply getting a list that I would look at for those accounts. And this is the list I came up with this week. And you'll see 3 of them I've highlighted in red because at this final check, I'm not going ahead with them. GEF, HURN, and ACEL do very well on everything so far, but look at the open interest for the dates I want to use, 0. that needs to be at least 300. The reason for wanting it to be at least 300 is if I decide to close the trade early, in other words, if I want to buy to close the put, then there's got to be a market for it. And zero means there isn't a market. In the terms that Owen used to put it, I'd be playing with myself at this point. Still, that's given me 4 very good trades, all with nice high annualized return on capital employed. One of them there, TAP, that's actually Coors Molson, the brewery. And at 83%, we're getting sort of down there, and also the one above it, CVS. I like these really to be 100 or more, but they're short-term trades and they're not far away from the current price. They're intended to basically make a quick buck. And that's my thinking on them. Next week, I'm going to get into more detail on comparing the share price history, recent history, to that of the S&P 500. I'm actually away off on a cruise. I'm going from Newcastle up to the fjords of Norway this week. So because I don't get back until Monday, in fact, Tuesday morning, the video next week will be on Tuesday. But before I go, I just want to remind you again, we've got the live training at the Sofitel Terminal 5, Heathrow, London. Friday, the 21st, Saturday, the 22nd, and Sunday, the 23rd of June. Friday is live trading. Saturday is about the scoring, the 4x4 systems. And Sunday, we get into the new stuff. I take quite a big part on the Sunday. And that is really interesting. It is the absolute pinnacle of the research and of the development that we're doing. If you're serious about trading, I really suggest that you should be there. You can book at the myinvestmentclub.co.uk website. There are not that many seats. I think we've only got about 22. So this is a small scale event with a lot of personal attention for everybody. And those places are starting to go. So if you want to join us, get booked up, get on board. And as finally, just as usual, if you haven't had a listen or a read of my book yet, there it is. You can get it on Amazon and 50 other good platforms. Thanks for listening. See you next week.